There seems to be a consensus regarding the fact that the world is standing on the verge of an explosive AI revolution, which seeks to engulf every major and minor industry. The trends have already been showing that, appealed by the reliability and operational efficiency of artificial intelligence, companies, large and small, have been turning to this cutting-edge technology. Despite the pessimism of market bears, the possibilities of a recession have only fast-tracked the adoption of AI tools across the globe, as giant companies such as Meta have been laying off large volumes of its employees, and simultaneously looking to automate and optimize the processes by intelligent system software. As many analysts point out, this trend has just gotten started, and like a domino effect, will continue uninterrupted, despite macroeconomic complications. As such, the growth opportunity presented by this boom is remarkable, and one that has been discussed widely by investor circles. In this list, we shed the spotlight on the top 5 stocks that will allow investors an opportunity to cash in on the rapid AI craze. To start off our list, we begin with Arista Networks Inc., the AI-focused cloud networking solutions provider, which goes by the ticker ANET. Arista is a great AI play, which is primarily positioned to benefit from AI tailwinds, as giant tech companies lay off staff, and expand AI and automated functions, especially in anticipation of the recession. In fact, Arista refers to these clients as its Cloud Titan customers, which make up 45% of its overall revenue, and include giants such as Meta and Microsoft. Given the structure of its operations and business model, Arista Networks has been outperforming most of its competitors. During the last 6 months, Nvidia and Micron saw their prices drop by 23% and 15% respectively, whereas Arista grew by an impressive 13%. This is the result of several competitive strengths inherent to the company. Most significantly, its enterprise-oriented strategy safeguards it from the downsides of retail risk, and allows for more certain organic growth as its clients scale up operations. Also, the nature of its clients ensures strong cash flows for long-term periods, further diminishing its risk factor. Not only did the company report strong top and bottom line growth in its most recent quarter, of 57% and 59% respectively, but it also is trading at its lowest PE ratio since the outbreak of the COVID pandemic. All of these factors clearly point out to the notion that ANET is presently a screaming buy. The second stock on our list is the growing champion of the robotic process automation industry, UiPath Inc., which trades by the ticker PATH. UiPath offers software automation tools that deliver tremendous value to its clients, which include Google, General Electric, NASA and many more. Through UI automation, which identifies potential areas where repetitive functions can be automated, its clients boast dramatic improvements to operational efficiency. UiPath's client, Uber, has boasted annual savings worth $22 million in 3 years, by automating 70% of its freight invoices, whereas Spotify reported saving 45,500 operational hours only, by automating 100 processes. UiPath also provides services to various government agencies, which include the U.S. Air Force. The company's net retention rate of 126% is a highly positive signal, as it indicates a high degree of recurring sales, and service expansion by existing customers. This is a major factor behind why the company saw its annual revenue climb from $607 million, to almost $900 million by 2022. For an investor, everything about UiPath is incredibly attractive, including its strong financial performance. It offers great customer diversity, as its clients are situated across a range of critical industries and varying backgrounds. Moreover, its balance sheet is extremely robust, with an available liquidity of $1.7 billion. UiPath is increasingly establishing itself as an undisputed leader in its space, and its growing retention rate and the caliber of its clientele is a testament to its capability. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Moving on, we take a look at the insurance industry's next-generation data analytics service provider, Verisk Analytics, which also goes by the ticker VRSK. The demand for these services have been growing at a stellar rate, as industries across the globe are opting for a more data-oriented and AI-based approach to risk management. Verisk stands among the top beneficiaries of this trend, given its strong positioning, impressive execution and a highly strategic approach to capital allocation. The largest and most successful business segment of Verisk is undoubtedly its insurance domain, which involves property underwriting, catastrophe models, and others, which has brought in revenues of $2.2 billion in revenue. This segment is also highly profitable with its astonishing profit margins of 50%. Recently, the company sold off its financial services segment for $515 million to TransUnion. It is also currently in the process of divesting its energy segment for $3.1 billion to Veritas. Despite being profitable, both these segments have pulled in lower margins than the insurance division, and have pulled in limited volumes of revenue. The company's management is clearly making a deliberate and strategic move to streamline operations, and in the process enhance its return on investment. Its balance sheet also becomes stronger in the process, as its net debt figure of $3.1 billion completely wipes away. There have also been strong indications in the recent earnings call that a considerable portion of surplus funds will be used in share buybacks. Verisk Analytics offers strong exposure for those seeking to climb high with a profitable and streamlined AI player. Next up, at number 4 on our list is the 3D design and entertainment industry's top software provider, Autodesk Incorporated, which goes by the ticker ADSK. Artificial intelligence is a crucial backbone of Autodesk's offerings, and is in large part a reason behind its rapid growth. Autodesk is fast establishing itself as the leader in this dynamic industry, with its high retention rates and repeat customers. With a strong focus on enhancing subscription renewal rates, Autodesk brought in sales worth $1.3 billion in its latest quarter, and is all set to come in with a record revenue of $5 billion for 2022. Most remarkably, the highest growth seen in Autodesk's performance comes in the North American markets with a 17% rise, which will likely prove beneficial to the company's brand among tech circles. Similarly, management has been especially focused on improving its operational margin by superior performance and aggressive cost-cutting, resulting in a 400 basis point increase against the prior year, to a margin of 36.3%. Autodesk has been very clear of committing to its goal of achieving a 40% operational margin by 2026. The leadership running the company is highly shareholder-oriented, given its laser focus on value delivery. More recently, a share buyback program of $5 billion has recently been approved, and thus gives more optimism to shareholders to latch onto. Autodesk is a clear example of a company that is structured to please its shareholders. And it is doing so by riding the rocketing growth trajectory of the AI industry. The final stock on our list is one of the most renowned and cutting-edge AI companies, C3.ai, which holds a trade ticker of AI. C3.ai is perhaps one of the best-positioned companies to fully capitalize on the ongoing AI revolution, which is set to explode within the upcoming years. In fact, last year, the Forrester Wave Institution proudly proclaimed C3.ai as a leader of the industry, given the growing, elite list of its enterprise clients. Above all, C3.ai is fast establishing itself as the one-stop solution for every AI application, catering to a diverse range of industries. It presently offers upwards of 40 AI software packages which include suites of CRM, supply chain, oil and gas, defense and intelligence, financial services, sustainability and many more. In addition to this, C3 is also aiming to drive the industry through revolutionary changes by democratizing applications, and introducing a no-code platform. Similarly, the company is also currently in a transition mode, after having shifted its pricing model from a subscription to a consumption model, based on which it expected revenue to dip, before taking a surging rise. Despite these projections, it still saw top-line growth of 7% to over $62 million, and actually beat analyst expectations by $1.6 million. Based on projections, this growth is expected to skyrocket drastically within the upcoming quarters leading up to 2025. The number of completed contracts saw a 100% increase to 25, with average contract value amounting to $800,000. C3.ai is a company that has been shifting gears with its sights on the moon. There is hardly a better pick for investors looking to be a part of a staggering AI growth story than this pure play stock. That's all from us in this video. We hope the insight we aimed to deliver has proven valuable to you, and would allow you to ensure your portfolio is well exposed to the AI opportunity. We would love to hear your feedback about our list in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to check out our website, stockstelegraph.com.